Hey guys, this is a Forex price action trading course part 2. This is lesson number 7, confirming biases with price patterns. Okay, let's get going. Okay, so here's a lesson overview. So first we'll be going over the basic paradigm of how to confirm biases with price patterns, and then go on to how to use legitimate and fake price patterns to confirm a bias so you too could use price patterns to confirm biases. Okay, so the basic paradigm. Number 1, in theory, any time frame qualifies as a lower confirmation time frame. But as a frame of reference, in order to confirm weekly and daily biases, use the 1 minute to 4 hour charts for lower confirmation. Alright? Okay, so at a basic level, any time frame can be used to confirm a bias, so it truly depends on what time frame bias you're using. So some chart providers have 3-year charts, some have 1-year charts, and so on. And so if you discovered a bias on a 3-year chart, you want to use every lower time frame all the way down to the 1 minute chart. And moreover, let's say you had a bias on the 1-year chart. Well, in that case, you also want to use every other lower time frame all the way down to the 1 minute chart. Okay, so in theory, any time frame can be used for lower time frame confirmations. Okay, but if you watch my forecast and analysis, you'll know that I always post daily and weekly biases. Thus, in this case also, I use every other lower time frame all the way down to the 1 minute chart to confirm a bias. And so if I wanted to confirm a daily bias, I would use a 4-hour chart, 1-hour chart, 15-minute chart, 5 and 1 minute chart. And moreover, if I was confirming a weekly bias, I will use the same time frames as listed here, plus this daily chart also. Alright, so in theory, any time frame is a candidate to confirm a bias. It more or less depends on the time frame that you measure the bias on. And so if you found a 1-year bias, you want to use all the lower time frames all the way down to the 1 minute chart to confirm this 1-year bias. Alright, so let's go on to number 2. Alright, so although any price pattern can be used for lower confirmation, we'll stick to the basic double top and H&S patterns in this intermediate course. Now keep in mind, these basic patterns are enough to confirm higher time frame biases when used in conjunction with trendline confirmations. Okay? Alright, so when it comes to price patterns, there are truly many. So for example, there's a wedge pattern, a flag pattern, and so on. However, in this intermediate course, I'll be explaining 2 price patterns. That'll be the double top and double bottom, and the long and short H&S. Now, what I want you to keep in mind is that the double top and bottom and the long and short H&S is more than enough to confirm a higher time frames bias when used in conjunction with trendline breakout confirmations. Okay, and I'll be going over trendline breakout confirmations in the next lesson. Okay, so like I always say, it's much more practical in terms of trading if you master 2 price patterns rather than having a limited knowledge of many price patterns. So just remember, it's quality over quantity. However, that said, mastering other price patterns does allow the potential for better risk and reward ratios for each trade. However, if it was just about confirming biases, again, the double top and bottom and the long and short H&S plus the trendline breakout confirmation is more than enough to confirm a bias. Okay. Alright, so number 3. There are 2 basic degrees of strength that price patterns create, normal and strong. We'll go into more depth on the next slide. Okay, so there's 2 basic degrees of strength that price patterns can create. It's normal and strong. Now let me show you how we get normal strength. So let's say there was a legitimate double top. Now legitimate double top innately shows normal short strength. Okay, so if price reaches its target height level, before reaching the second top stop loss level. So let's say price wiggles around and comes down to this level before reaching the stop loss level. At this point, normal short strength is confirmed. Okay, but in this same situation, let's say price did not hit its target height level before reaching the stop loss level. So let's say price wiggled around a bit, got close, but came right back up to that second top stop loss level before reaching the target height level. Well, that would mean that although innately this legitimate double top created normal short strength, long strength was able to override that normal short strength and thus creating strong long strength. Okay, so you want to remember, it is the overriding of normal strength that creates strong strength through a price pattern. Okay, we'll go into more depth about this in the next slide, but for now, just remember, there's two basic degrees of strength through price patterns. That's normal strength and strong strength. Okay, let's go on to the next one. So use legitimate and fake price patterns to find strength long or short in order to confirm a higher time frame's bias. Okay, so there's two types of price patterns we'll be going over today. That's the double top and double bottom, and the long and short HNS. Now you want to remember that this double top can be legitimate or it can be a fake, right? So there's two options here. And same with this HNS. It could be legitimate or a fake. All right, and if you don't understand how to find legitimate and fake price patterns, please refer to part 1 of this course. Okay, so we're going to be using legitimate and fake price patterns to confirm a higher time frame's bias. So for example, let's say we had a bias on the higher time frames. And let's say the bias was short, or in other words, the main stop loss is at this price level, while the main target is at this level right here. Now you want to remember, in terms of confirming biases, there's two things we want to be looking at. And number one is that we want the lower time frame's confirmation to show strength in the direction that we want price to go. Okay, so let's say price is wiggling around here and starts to turn right here. Now at this point, we want price to go up, right? So we could have price pull back to the stop loss to take a short entry to this target. And so at this point, since we want price to go up, we want to see strength long on the lower time frames. Then let's say price hovers around, comes up to these levels near the stop loss level. Now at this point, we want price to go down, correct? For we were able to minimize the stop loss and increase our profit potential, right? And so at this point, since we want price to go down now, we want to see more lower confirmation showing strength short. Okay, so we always want to confirm strength in the direction that we want price to go. And number two is, again, if there's normal strength and strong strength, we constantly want to see more strong strength in the direction of the bias. Now that's in the entirety of this price action, all throughout. Okay, so for example, we want to see many signs of strong short strength all over these areas, while simultaneously only seeing normal strength long all throughout these areas. Okay, and if you're having trouble understanding the basic concept of confirming biases on the lower time frames, please refer to lesson 6 of this course. Alright, so now let's go into more detail of how to confirm biases with fake and legitimate price patterns. Alright, so how to use legitimate and fake price patterns to confirm a bias. Number 1, legitimate double tops and short head and shoulder patterns innately produce normal short-term short strength, while legitimate double bottoms and long head and shoulders innately produce normal short-term long strength. Okay. Alright, so at a basic level, a legitimate double top and moreover a legitimate short HNS innately produces normal short strength. Okay, but that's only if the target height level is reached before the stop loss level. And in the head and shoulders case, that stop loss level will be at the right shoulder right here. Okay, so if this legitimate HNS forms and price falls right down to its target height level before reaching the right shoulder stop loss level, at this point, normal short strength is created. Okay, and the opposite is also true. So if there's a legitimate double bottom, or moreover a legitimate long HNS that forms, if the target height level is reached before the stop loss levels, same with HNS, those targets being at these levels right here, well, that will produce normal long strength. Okay, so now let's go over fake patterns. All right, number 2, fake double tops and fake short head and shoulder patterns innately produce normal short-term long strength, while fake double bottoms and fake long head and shoulders innately produce normal short-term short strength. All right, so let me explain these. So a fake double top and a fake short HNS innately produce normal long strength. Okay, and that's assuming the stop loss level is reached before the target height level. Same with the HNS at the right shoulder right here. Okay, so if this fake HNS forms and price wiggles around and does not hit the target height level and reaches the stop loss level, at that point, normal long strength is created. Okay, so let's go over double bottoms. Okay, so if there's a fake double bottom that formed, or a fake long HNS that forms, as long as the stop loss levels are reached before the target height levels, they will produce normal short strength. So for example, on this fake double bottom, if price wiggles around a bit, does not hit its target height level, and falls right back down to the second bottom stop loss level, at this point, normal short strength is created. All right, so that's the basis of how you can get normal strength. All right, so now let's see how we could get strong short-term strength through price patterns. Okay, so no overriding of innate strength creates normal strength. And that's what we just covered up here. Whilst an overriding of innate strength produces strong strength. Okay, so if we had a legitimate double top, which innately produces normal short strength. Now let's say that although this is a legitimate double top, price did not reach its target height level and instead reached its second top stop loss level right here. Now at that point, there is an overriding of this normal short strength by stronger long strength, and thus strong short-term long strength is created. All right, so let's look at a fake double top. So let's say this time there was a fake double top that forms, which innately creates normal long strength, correct? However, let's say that price wiggled around and actually hit its target height level before reaching its second top stop loss level. Now that will signal an overriding of this normal long strength by stronger short strength, and thus creating strong short-term short strength. Okay, so you want to remember, strong strength through price patterns is going to be through this overriding of strength. Or another way you could look at this is that although there was long strength created, even stronger short strength was able to override that normal long strength and was able to push price all the way down to its target height level before its second top stop loss level. Okay, so you want to remember a foundational principle of confirming biases is that there's this overriding of strength, which makes the degree of short-term strength stronger and stronger. Okay, all right, so let's go on to the next one. All right, so the higher the time frame that strength is created, the stronger it is. All right. Okay, so at a basic level, let's say there was a 5-minute legitimate double top that formed. And let's say this double top hit its target height level before reaching the second top stop loss level right here, like so, thus creating normal short strength. However, let's say a little bit later, there was actually a 1-hour legitimate double bottom that formed, and it reached its target height level before reaching the second bottom stop loss level, and thus confirming normal long strength. Now, if these were the only price patterns that formed, this 1-hour double bottom creates more long strength than this 5-minute double top. Okay, so the higher the time frame, the more strength it creates. Okay, so all things remaining equal, a 1-minute price pattern that shows normal long strength is weaker than a 5-minute price pattern that shows normal long strength. And this relationship continues all the way up to the longest time frame chart that exists. Okay, so let's go ahead and wrap this up with the last point. Okay, so strength should form in the direction that you desire price to go, and moreover, there should be higher degrees of strength in the direction of the bias. Okay. Alright, so we'll go through this again. So let's say there's a bias on the higher time frames. So let's say we had a daily short bias. So the main stop loss level will be right here, while the main target will be right here. Now let's say price wiggled around all the way down to these levels right here near the target. But at this point, we want price to go up, right? So price could pull back close to our stop loss level so we could take a short entry along with this daily bias. So let's say a legitimate 5-minute double bottom forms here, which actually hit its target height level before reaching the second bottom stop loss level, confirming normal long strength. Now that's good because we want price to go up. And let's say price follows through and starts to go up towards our stop loss level. And moreover, let's say we got a fake 15-minute HNS that formed, which actually hit its stop loss level before reaching its target height level, thus confirming even more normal long strength. Okay, and furthermore, as price gets close to our stop loss level, let's say we got a 1-hour fake double top that formed. However, let's say this fake double top reached this target height level before reaching the second top stop loss level, which creates strong short strength, correct? And at that point, that's what we want to see, because now we want price to start heading down because we already minimized the risk and increased the profit potential. All right, and moreover, let's say price fell down to these levels, furthermore created a 15-minute fake double bottom, which actually hit its stop loss level before reaching its target height level, confirming normal short strength. And we want to see this confirmation through price patterns all the way down to our main target. Okay, and the other element you always want to see is higher degrees of strength in the direction of the higher time frames bias, which is short. Okay, so we had normal long strength in the opposing direction of the bias. However, we had a higher degree of short strength through this strong short strength created by this 1-hour fake double top. Okay, so that's the basics of using price patterns to confirm a bias. Now, I know this is a new idea for you guys, so I may be missing a few points here and there. So feel free to ask me any questions. Okay, so let's go on to the next slide. Alright, so that was it for this lesson. In the next lesson, we're going to go over confirming biases with trend lines. Okay, so again, let me know if you have any questions, and I hope you guys have a great day. And thanks for watching. Okay, bye.